So welcome back to Wealth Wednesday. I'm Neil Watson, a certified financial pro, and joining me today is my partner here in Marietta, Evan Brockmeyer. Today, we're going to nerd out on something that could save retirees a lot of money. That is the new Enhanced Senior Deduction. We'll show you why it creates some planning opportunities, especially for Roth IRA conversions. That's all coming up next. Welcome back to Wealth Wednesday, our bi-monthly show to help you make better decisions about money. Evan Brockmeyer joins me today. Evan, we know that most people, about 90% of Americans, take advantage of the standard deduction now. And if you're over 65, you get an additional $1,600 per person. This year, with the One Big Beautiful Bill Act, we now have the Enhanced Senior Deduction. Tell us about that.
Yeah, so this was Congress's way of enacting the no taxation on Social Security benefits in a way. So through the back door, they boosted the benefit here a little bit. So between 2025 and 2028, you can take an additional $6,000 deduction if you're over 65 and your income is within the boundaries. So that's $150,000 of adjusted gross for a couple that's over 65 and $75,000 for the single filers. So couples meaning married filing jointly. This should benefit 8 to 9 out of every 10 eligible seniors. And in total, if you think of it as a couple, again, you've got the standard deduction at $31,500, the regular over 65 deduction of $3,200, and then an additional $12,000 for the new deductions that have been enacted. So that summarizes the big benefit to seniors in this case.
Yeah, and one of the common things that we see with most retirees is that they're receiving Social Security and then they're depending on distributions from retirement plans like IRAs or 401ks. So deductions like this are huge. It means it's going to lower your taxable income, period.
Yeah, it's a way to keep you in a lower tax bracket, and that's where our strategy piece comes in. And you have to understand how tax brackets work to really maximize what this benefit is allowing to do. So we, in the financial world, we talk about the buckets fairly frequently, and this is another way that we can spin that narrative to make this a relatable concept, Neil.
Yeah, and oftentimes the tax calculations can be a little bit confusing. They're not as bad as you might think they are, but we got to start with getting to what your taxable income is. So the first thing is you take all of your income and then you make adjustments for things like Social Security, because not all of your Social Security is taxable. Then there are things like capital gains. Long-term capital gains are taxed at a different rate, and that's adjusted a little bit differently, as is qualified dividends, as well as things like interest from municipal bonds. And then you get kind of what they call your adjusted gross income from that. And then you subtract all of your deductions to get you your taxable income. That's the standard deduction, the common senior standard deduction, and now the new senior standard deduction. And then that's when we can start talking about the buckets here.
Right. Yeah. And keeping in mind that some of that income that you mentioned, distributions from a Roth IRA would not be something that's counted as income in that case. So with that in mind, and being mindful of that caveat, if we look at the graphic here, this is kind of income tax 101. Not every dollar that you earn or that you are taxed on is taxed at the highest marginal bracket. So if you hear people talk about being in the 22% bracket, well, not all of your income is taxed at 22%. It's a graduated scale. So each bucket represents those brackets, the 10, 12, the 22, 24, so on and so forth. And as you fill the lower ones, so you fill the 10, it spills over into the 12. That's how your overall, effective tax rate is determined. So all the water in one bucket is taxed at a given rate, and then it steps up to each of those subsequent buckets. So all that being said, the new senior deduction should prevent people from having their income overflow into that next higher bucket.
So that's a great point. And we're going to take a look at a couple of examples that illustrate this a little bit. So the first graphic on your screen here is a couple, John and Mary Ann, and they basically are depending on Social Security and distributions from IRAs, pre-tax IRAs in this case, for their income. Their total IRA distributions in this example are about $36,000. Their Social Security benefits total are $44,000, but not all that Social Security is taxable. So we've adjusted for that here. Their adjusted gross income in this case is $73,400. Now, before the new senior deduction, their taxable income would have been $38,700. Now, after this new senior deduction is $26,700. They're saving about $1,400 here from this new senior deduction. They're not in a situation where they're switching tax brackets to that next level. But Evan, Tom and Lucy are in a little bit of a different scenario here.
Yeah, and from a graphical standpoint, it's going to look very similar to the couple that Neil had just explained, but the subsequent slide is going to tie all this together. So Tom and Lucy are ending up in a higher tax bracket when you look at their adjusted gross income for the year, having earned $135,000, and then their total tax savings becomes around $1,775 when you factor in the new senior deductions for both of them. So I think when we look at these two situations together on the final graphic, it'll tie the concepts together pretty clearly.
Yeah, and on this screen, we're going to kind of show that visually, this bar chart here. So Tom and Lucy's taxable income is such that without that senior deduction, a portion of their income is now going to be taxed at 22%. But the new senior deduction means that all of their income is taxed at a max of 12% at this time. And there's some room in that 12% tax bracket that they can use for planning opportunities. Evan, what kind of things do we look at in these situations?
Yeah, Roth conversions is a big one. If you have, enough runway in your life, in your opinion, to potentially benefit, or as a estate planning vehicle to benefit the next generation with a non-taxed distribution when it's received. So you've got that gap in the orange with the enhanced standard deduction that allows for some of that money to go into the Roth bucket at a lower tax rate. And again, this is a concept that depends on beneficiaries and what their income looks like, what your overall goals are for leaving a legacy or hanging on to it for your benefit. But it does present some additional opportunities to take advantage of some advanced strategies that can help both you and those you would like to benefit.
Yeah, and it's, one of those things is it reduces your own required minimum distributions potentially down the road, depending on what, of course, the earnings of the account do over that time frame. So your IRAs could be in a situation where those RMDs could be substantial, and you have no choice at that point without some other techniques to take that money out and pay the tax on that. And sometimes that can push you into a higher bracket there as well. So Evan, what are the next steps that people need to do if they are thinking about this and how this might impact them?
Yeah, it's a great opportunity to do some proactive planning between now and year's end. Just, a little bit of information, if it's not already built out into a financial plan, or it's time to do some updates and refreshes, can help you and us determine how to take advantage of this benefit and see if there are any opportunities that we can show you the benefits of the senior deduction and the advanced planning strategies for you.
Yeah, this deduction isn't just a tax break. It is a planning opportunity that can help you and your family over decades. And this is where we can help. We have the knowledge and experience to help navigate through this stuff. And if you'd like to learn more about how we can do that, reach out to us at cfswv.com. And if you like this video, please hit that thumbs up button. And don't forget to subscribe to our YouTube channel so you don't miss the next episode of Wealth Wednesday. Thanks for joining us. Have a great week.